Welcome back, everyone. We have 170 billion reasons to be bullish on this stock. Its name is Blackstone. I don't own it yet, but I might own it by the end of this week. While I was researching, I got so bullish, and I said, "Guys, I have to share this with you." I went through the Morgan Stanley reports. I talked to some people that are experts in the field. I talked to some Blackstone people. I talked to the community. We crunched the numbers a few times back and forth, and we're so bullish. And this week, some options are expiring. If we don't have to buy 100 shares of those, I might deploy it for Blackstone, and I want to share with you why. I'm just finished with all the number crunching and all the reports. So let me share with you fresh from the trenches what I just shared a few days ago with the Sprint Club members, who are always the first to receive these things. So Blackstone is at the $140 right now, and its target price is 222 US dollars. They have 170 billion in dry powder, and they are planning to deploy it into AI. They have started deploying into AI since 2015, guys. 2015. So they're now 10 years into deploying money into AI infrastructure and all the needs for cloud computing. Guru Focus thinks that it's modestly undervalued and thinks that it's worth 171. It's at 140 today. Morgan Stanley published a very interesting paper that I have summarized also in the Sprint Club. They expect $222 in the next 12 months. Again, it is at 140 right now. You can check the financial report here. And one of the conversations was very interesting because Morgan Stanley talked to investors, and they see real estate as a drag. A few are inclined to express optimism, particularly through leaning into Blackstone shares that are down 13% over the past 30 days. This is in stark contrast to recent announcements from alternative managers that are aggressively deploying into real estate and markets, buying into the asset class through dry powder of funds and balance sheet capital. I like that investors shunned the name when it was down 13% and are recently down about 30%. This pessimism, despite money moving back into real estate exposure. That was Morgan Stanley in their deep dives. I did my deep dives too, and just a few days ago, the strategy sprints score flipped 10. So when you flip 10, that means that you have a moat that's widening, because a moat is always moving. There is no moat. A moat is always dynamic. You have either no moat or a beginning moat, which is a narrow moat, and that moat is either narrowing or widening. We want a widening moat if we consider a company, and they got a widening moat. Then we want pricing power. Pricing power means they can increase their prices and their clients will say thank you and still pay it. So they have pricing power. Confidence is, how high is my confidence, Simon's confidence into this? Because if you don't have confidence, as soon as there is a correction, a general correction or a specific correction, then you will not hold the stocks long enough for them to compound. That's why you need a high conviction. In this case, I have a high conviction. Cost control, yes. Optionality, yes. Profitability, yes. Top allocators, yes. Are the incentives aligned? Yes. And is it undervalued? Yes, because it's worth 222 and it's at 140. So it just flipped 10. That's one thing that I wanted to share with you. And the next thing is that they are investing into data centers, into acquiring a California-based AI and data intelligence solution leader with 300 million that's valuated at 5 billion. That's critical for compute and for the needs of AI, and many other details that I've shared in the Sprint Club. And the Sprint Club is still free, so just go to strategysprints.com and join. It will stay free until 1st of April, so you have like 30 more days to join. And even afterwards, it's not expensive, so it's definitely 10 to 1 in terms of value, and you can cancel anytime. So this is Blackstone. I don't own it right now, but I might be an owner by the end of the week. We have options expiring. My next video is about those options and about the question, when should we buy? I've learned a lot from reading right now Giuseppe Paleologo's Advanced Portfolio Management, but also from our experience with being volatility contrarians. So I've learned something about when, in terms of volatility, to buy a stock, and I'm going to share that in the next video. When should we buy? So keep rolling, everyone. See you in the next one.